to be on how the markets are responding this morning after being opened. The Nifty opened with a sharp gap down of over 400 points, followed by continued selling throughout the day, testing levels below 2,3900. Although price attempted several rebounds during the rest of the week, they largely remained under pressure. However, on Friday, there was a noticeable improvement in global cues, allowing the market to close on a positive note. Despite this late recovery, the market ended with a week down by 1.43, finishing just above the 2,4350 level mark. Well, joining me on the broadcast is a senior economist, Dr. Sharat Kohli, and Mitali Nikor, a senior economist as well. I appreciate you both joining on the broadcast with me and welcome you both. What is, in fact, starting with Mr. Kohli, this in fact has been, Mr. Kohli, an eventful week. So how do you see the markets opening up this morning? And today's opening has been, of course, rather eventful as well. How do you see and view this?
Well, good morning. I think the market opening is quite normal because normally what happens is pre-market, we are all aware there is gift. Gives you an indication in the morning as to where the market is going. And today the international cues were quite mixed. There were mixed reports from America, mixed reports from Singapore, from Japan. So the market is down at this point of time by about, I'm talking of the Nifty, by about 74 points. I think it's quite normal. This has got nothing to do with Adani. The market in the beginning picks up international cues and moves from there. Adani has nothing to do. I really don't think investors, traders have given any weightage to the allegations made by Adani on the SEBI chairman. Markets fall and rise every day. And this has got nothing to do, and this is nothing like the kind of fall we saw 18 months ago when the Hindenburg first set of allegations were made. So I think I completely discard that factor as far as market opening is concerned. Market has been quite volatile in the last 15 days or so. It has touched all-time high. Even today, market is around 24,290 plus as far as Nifty is concerned. So I really don't think that Hindenburg effect is there on the market. It's just a normal ups and downs.
Well, of course, all eyes on the market performance as of now as Nifty opened there. I'll also like to take a question from another guest, senior economist Mitali. How do you view this, in fact, opening of the markets, and what is essentially your advice to the investors, Mitali? If I'm audible? Okay, we'll try to restore the connection with our another guest, Mitali, as well. Mr. Sharat, if we have to, as you have clarified in one of your answers here, that the opening of the markets has no bearing of the response by the SEBI to the Hindenburg, and we continue to track that story as well. But what is your advice essentially to the investors at the moment?
I don't think investors need to fear out of this. Nothing like earlier is going to happen. We all know earlier 8 lakh crore plus of market cap was eroded after the Hindenburg report came. But I think the truth of Hindenburg is now before the nation. And I don't think anybody is giving credibility to that report. So the investors need not worry. Investors always have to be cautious when they're investing and trading in stock market. That word of caution is always there. And I think other international factors, larger factors, like the slowdown of the American economy, the tensions in the West Asia. Indian economy per se is very strong, but obviously markets across the world are governed by international factors. Those may have a bearing on the market, but Hindenburg definitely does not have a bearing on the market.
So in your opinion, there is no bearing of the Hindenburg's report as well. And of course, when we understand that it indeed is not related to what has been also parallelly happening with the Hindenburg SEBI fiasco. What do you think about an attempt, Mr. Kohli? Has there been an attempt to shake up the markets that did not work, or is it just too early to call that?
No, I think there is a clear attempt, no doubt, because we all know SEBI had sent a notice to them a month and a half ago, a show cause notice. And Hindenburg is a known short seller across the world. It gains from, falling markets, falling reputations, demeaning companies, demeaning corporations, and government for that matter. So, yes, there is a clear attempt here, but I really don't think their attempt is going to work this time. You can't fool a person twice. There is a saying in English, you fool me once and you're a fool, you fool me twice and I'm the fool. So I really don't think markets are going to make a fool of themselves. And this is going to have no impact on the market, and this attempt is going to fail. In last evening on your channel, I had said that yesterday, Sunday evening, an investigation should have been made as to how many open short selling positions are there at this point of time. But we would know in the morning that who's gaining out of it. So I hope some action was taken on that, because whatever fall that you are now seeing, if there is any contribution of that factor, it will come to the surface. And I'm sure SEBI is keeping a very close watch. SEBI's chairman has given a clarification that she has got nothing to do with this and she's got nothing to hide there. So there is no reason why markets should react because of this reason. Any fall that you may see today, market fall or rise every day. There is never a day where market has not risen or fallen down. So if market falls, it is not due to Adani factor. It is due to other international and domestic factors, which include results of some companies and, as I said, global factors.
All right, Mr. Kohli, I'll request you to kindly stay on with us while we also engage with our another guest on the broadcast, Ms. Mitali. Mitali, what, in your opinion, has been kind of a reason for the performance of the markets as far as the opening is concerned? What we can understand by one of the perspectives that have been shared by our guest, Mr. Kohli, is that, in fact, this has no bearing of the reports that have come from the Hindenburg attacking SEBI. But as Sensex is down 200 points and markets have opened also with Nifty down with 66.7.5 points, how do you view this opening as the market is concerned?
Good morning, and thank you for having me on the show. I actually feel like there are a number of factors at play this morning which are impacting the indices. The first is, of course, global headwinds. When we look at the overall last 2 weeks of the stock market, what we are seeing very clearly in the stock market in terms of the cues from the U.S. Federal Reserve announcing that they would be lowering rates, cutting rates in September. Then the Japanese Bank of Bank of Japan saying that they have raised interest rates, and India holding its interest rates steady just at the MPC meeting on 8th of August. All of these factors play in quite significantly into the market performance, because it sends a signal of, in which direction are banks going to hold rates. So I think that one of the major reasons for the stock market opening a little bit in the red this morning are linked to the interest rate announcement. The Hindenburg research report, of course, it takes in the sense that, for a lay person, they suddenly hear about, some agency in the U.S. is alleging this sort of a scam happened. Of course, somewhere, the layperson might stop to think that, is this true? To all of those laypersons, I think, as Dr. Kohli has also said, and I'll also say, there is no evidence to say that this report has any credibility at this point. The report is full of allegations, but not enough investigation behind those allegations. And they are very serious allegations, to question the institutional mechanisms for stock market trading in a major emerging economy. One of the fastest growing economies in the world is not a small thing and cannot just be done like this on an open scale. It should have been a report that was submitted to, say, for example, American authorities, to international organizations, within the World Bank and United Nations. There are enough systems. IMF has systems, where these concerns can be raised. And also it can be raised with the government of India. But, these kind of, just putting it out in the public domain, this is just an attempt to manipulate market sentiments. And as Dr. Kohli said, it really should not have any impact, because investors should be able to see through this.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.